Hello, happy Monday. This is Neil, and it is, Monday the 10th of July. And we're a bit stalled here, as you can see. Really, absolutely nothing really to report today. Just waiting for the next round of information as we've discussed last week. So today we had a Fed parade, a number of speakers, and they will ensue throughout the week. Next, most important, I believe we have CPI on Wednesday, PPI on Thursday, and a slew of some meaningful earnings tickers like JP Morgan, Wells Fargo, BlackRock, etc. on Friday, along with University of Michigan's prelim consumer sentiment on Friday also, and that's an important one. But as of today, Monday, just nothing. Really waiting on, I guess, the next number, which is really Wednesday. So, as you can see here on this daily chart, ES has been as high as almost 4,500. And since then, we've got lower highs, including today. And it's interesting. Notice the inside range candle at the top before it rolled, and then the inside range candle yesterday, which was Friday, the last trade session Friday. And so what I can tell you about this is if tomorrow we end up with, and one more thing to notice too, it's come back in as it has here a couple of times prior and held the 20 period moving average, and it seems to be holding that every time it comes in, for that number. And then also one last thing, historically, we looked in the stock Traders Almanac and found that historically, the first half of July kind of keeps things together, kind of holds it together, and then the highs are in, i.e. it can actually, kind of come back in and breathe some. So a few days maybe deep into this week, and it can keep, kind of keep things good here. So what we've got right now, at least, is a retracement back into and holding the 20. It's still on lower highs, but on the heels of this inside range candle, which would tell me that tomorrow, if we have a higher low, which is very likely, and very possible, I'll say, very possible, because look, the close is going out up here in the upper quad, or 25 percentile or quadrant of today's range. So tomorrow, keep with a higher low and take out today's high. That could start the next little leg that we'd imagine lasts a few days deep into this week. Historically, that would be accurate to say. I mean, it's like through in and about the 16th, where the early part of July, the work is done early. We talked about this early on as we were just getting into July. So that's kind of it. Still, I think we discussed this last week. So remember we talked about the gap mid of the gap on the way up, and the low of the candle on the 16th on the way down. On the RTH session data was 51. That is still the over-under. I believe that's it. That's the over-under. It is 44.51 is the level to beat. Looks like the high today was about 47. So 51's the level to beat, right? Above 51. You look at I would imagine a kind of pretty swift kind of trade up to 64, because that was the level, that was the bottom of the support before the flush break on Friday. It was at 64. Next level up from that would be to readdress and just slightly extend the 75 high, so we'd say 77, so 64, 77. And then 87. Well, it's actually more like 85, really. Okay, so 64, 77, 85, and maybe above that, then there's nothing really to keep it off the highs right there. On the way down, we've got some work yet to do. I don't know if it gets if we have to go up first before the down, but on the way down there's some work to do. There's some levels to readdress. It's like starts. It just barely starts really with 43.90, and then it goes. We'll worry about it later in the week, but it goes then 65, 51, 38, and 27 on the way down, and those are in the 43 handle. So we'll worry about some of those when it looks like there's actually a breaking price action to cause us to worry about some of those prices. But for right now, it's early yet still in the week. It's early yet still in front of the number. There's no reason for price to really do anything until we get the number, and that's on Wednesday, and we'll see from there what kind of mood this thing's in. The consensus is right now for the number to for Wednesday, for this number to come in pretty nice. Let me look again. It was like almost a full point less than prior. The CPI core month over month is 0.3 versus 0.4. The CPI year over year is expected at 3.1 versus prior 4.0. That's almost a full point. So if it comes in like that, there's still going to be a bid in this market. I mean, it comes in upwards higher than that, closer to the 4. Obviously, we can look at it to more highly probably price in that second rate hike adjustment in September over and above the one that we know we're getting here in July. I mean, that's just like 95% priced in. You can see it in the Fed funds futures right now. It's largely priced in. So that's what we got. That's where we're at. It's early in the week. You got some levels on the up and the down. The over under is the thing, right? Long above, lean short below. 44.51. That's the spot. I'm telling you, that's the spot to beat. Okay. Has been since the 16th. Yeah, 16th of June. That's been the level since the 16th of June. That's what I got. Take care. Good trading. Check you again at the next update.
Without simpler trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency. It's one of the things that won me